any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
What's going on, guys? Good morning. Good morning.
Good morning, everyone.
Hope you all are doing well. Happy Wednesday.
Oh, Jinx.
Yeah.
A little jazz running this morning, a little coffee table jazz. So grab your coffee, your tea, your juice, whatever gets you going. Having a great week thus far. A lot of the setups have already manifest themselves and taken place, but excited to spend some time with you guys this morning.
Yeah, if you guys have been paying attention to the Smart Money Sundays video that was posted on Monday, and then yesterday's daily market breakdown video that was intended for our VIP community, but decided to post it free to you all. A lot of setups have already been playing out, so definitely just pay attention to those. You can make easy money just by following along every single day, every single week to our analysis. You have access to these lives. You have access to all the free stuff on our YouTube, the Smart Money Sundays. So definitely utilize them.
Absolutely. Yeah, guys. And the Smart Money Sundays, is free every week on YouTube. Fire setups always given out. But, mentorship students, people within our VIP community, they get Smart Money Sunday style videos every single day, right? With our daily market breakdown videos. So if you're interested in that, just head over to our website, arielfxtrading.com, and book a free call with either Nathan or me, and we'll talk it through with you. But
that's right. Definitely
tune into the free stuff, guys. There's a lot of it, a lot of value.
Yep. Yeah. VIP members, if you guys are on here today, please take advantage of these daily market breakdown videos that we're sending out. Keep up with all the analysis, pretty much giving you essentially signals, even though they're not signals. All the areas of interest are really working out. I will be doing a breakdown this Friday about all the trades that we have been taking, all the wins, losses, full transparency for all you guys. So you guys can see what trades you're missing, what trades are hitting, where you should be taking profit, when to move stop to break even, all that good stuff. And I will show the whole Discord channel with all of the trades sent out prior to them playing out. So it's full transparency. So I'm going to give you guys that this Friday so you guys can take a look. But anyways, you guys know the deal. Drop your location, drop your pairs, drop whatever else. We'll just see where you guys are from and what pairs you guys are looking at to start the trading day. And we'll get into it in just a few minutes.
Doing well, Martin. How are you? Got literally 2 weeks in a row of overcast weather, but football season is upon us. I went to tailgate and watched my Auburn Tigers on Saturday. So that was fun.
I'll drop the Discord in here.
Yeah.
Yep, my Georgia Bulldogs got the dub this past Saturday as well. I'm very excited. I've been waiting for football season to start for a while. This is American football, by the way.
Right.
So that brings me in to say we're going to be switching our live session times just because Sunday football for me is really big in our family. So we always get together and watch football. So we'll be switching our lives to Saturday morning, 10 a.m. Eastern Standard Time. So 10 a.m. Eastern Time, Saturday morning, we'll hold these live sessions. Obviously, if you're unable to make it The recording will obviously be posted to the Trading Night YouTube channel. So be sure to check that out, guys. You're not going to want to miss these live sessions. And if somehow you have to miss them, please watch the recording. There's so much value given out. There's so many trades that play out every single solitary week that you guys just don't want to miss out on, I promise. So be sure to tune into those.
And he's talking about the normal Sunday session. Yeah, we'll still have the Wednesday session, but
yes,
the normal Sunday 2 p.m. will be that Saturday before football.
Yeah,
because we just love football. Sorry, guys.
Yeah. Still every Wednesday, 8 a.m. Eastern, like we're doing now, but then we're going to switch from Sunday at 2 p.m. to Saturday at 10 a.m. Eastern time.
Yeah, bro. Georgia looked the exact same as the national championship team. Like I couldn't tell any difference whatsoever. Even though they lost a lot of players. Trinidad, TNT.
Go SEC. That's right. Go SEC. Mongolia, New Orleans. Man, I want to go to New Orleans. I want to Mardi Gras.
I went to New Orleans during COVID, and it was absolutely dead. French Quarters. Cool looking city, though.
Yes, definitely. Really, really.
Anybody but Bama. That's right. War Eagle.
Yes, I do not like the Crimson Tide.
Anybody but Bama or Georgia, I'll say.
Let's see what else. Let's see. Repairs USD. Jumped on your setup on 80 CAD 2 Sundays ago. Yeah, we have 5 open trades on 80 CAD. Using proper risk management, 0.5% risk each, you'd be up about 11.9% currently just on those trades. So this is, I'm telling you guys, tune into these live sessions. We give this stuff out every day. And if you want updates and even more trades, our VIP gets everything that we send out. But we're only limited to the time that we have here with all you free members, but that's not a problem. For challenges at max 1% overall risk for any given time or per trade. Yep. So per pair, per trade. So if you're trading, let's say 80 CAD, right? If you have both of those pairs or both of those trades open, so let's just say you have 2 of them, then yes, 0.5% risk a piece or less. So no more than 1% risk per trade. Obviously, if you have 10 trades open, which I don't really recommend, but you can, then up to 10% risk, I guess. I'm just trying to teach you guys proper risk management. So the winners of the trading challenge will have been using proper risk management. Perks for VIP for challenge, yes. So you guys can use all of our VIP trades that we send out every single day on the challenge. We're not limited to that. However, we cannot trade cryptos. Sorry, guys. You cannot trade cryptos, and you cannot use algorithms. You cannot use our Wyckoff Wizard algorithm because it's really too good for this type of manual trading challenge. So only manual trades only. But VIP members, yes, you can use everything that we send in every single day for this challenge. Do you guys want to try indicators? No, we don't use indicators except for VFI. I don't need indicators for liquidity or fair value gaps because I already know where they are anyways. South Africa. I always see South Africa in here. Awesome. Heard that, what's it called? Type 2 load shedding or tier 2, whatever, is back. Heard that was prevalent. Very sorry, guys.
Man, really feel for you guys.
Yeah, definitely.
Coming to the States very, very soon.
Yeah. Let's see. GBP AED. Yeah, I'm actually going to talk about GA today. I have a really interesting setup. You look at Euro USD. Yeah, I do look at Euro USD. I'll go over it very briefly today. I missed my entry last night. Quite unfortunate, but looking for that same setup, still valid. I would love to know how you manage the 80 catcher to stop. Price descends. Yeah, I'll go over 80 CAD today, and I'll tell you what I've been doing. So maybe that would clear some stuff up for you. Type 2 load shedding. Yeah. Oh, man. All right, we'll get started here, guys. It's been about 10 minutes, so we'll get going. I'm going to share my screen to start, and if Aiden has anything at the end to share, he can definitely go over it. But save your questions for the end, please, because I cannot see the chat as I'm going over these pairs. So as always, I'm going to share my screen here, and then please just drop a yes in the chat if you can hear me. If you can hear and see me right when I see that first yes in the chat, I'll get started.
Yeah, I can see you, Nate.
We're all good to go. Okay. Awesome. Okay, we're good to go here. Sweet, let's get into it. So hopefully you guys can see all this. If you can't, drop it in the chat. Aiden will just send me a text. All right, cool. So with AUD/USD, as you guys should know from the past few weeks, probably over the past month, we've been extremely bearish. We were originally wanting a setup last week into a lower time frame supply level. We just continued. So we just have to keep continuing to follow lower time frame structure. And of course, if we get an overall pullback, we have to understand it's not a break of structure. It's just an overall pullback because we are higher time frame bearish, right? We are looking at taking out this low from July of this year. All right, so we're going to be attacking this liquidity. I don't think we're going to have a pullback up into our level, but if we do, we'll definitely be looking to sell at 6,790. But overall level targets will probably be this 6,612. That's where the liquidity rests. That's where the objective is going to be met. So I think that objective will probably be met before any significant pullback occurs. But if we do get a pullback, we can be looking to pull back into 6,790. Now, this region of price was something that Aiden called out on Smart Money Sundays. If you guys tuned in, you would have taken this trade right at the imbalance fill where we initially swept liquidity, lower time frame, and had that break of structure to the downside, creating that draw on liquidity equal lows and that liquidity resting below. So phenomenal trade to start the week. You guys should be up a decent amount. I'm not exactly sure what I'm up at this current time. Using 1% risk, you guys should be up 5.5%, 0.5%, a little over 2.5%. So, I mean, even if you just took this trade, you could easily almost pass a challenge, right? So 6,790 is our re-entry. Counter trend, high, low, reaction from demand, lower low. Okay, this becomes our supply. Demand was in here. We've reacted, but failed to make a higher high in this sequence, right? Obviously, as expected, because we came into prior structure, sponsored move imbalance. That was expected anyways. But then we rolled over, creating that demand to supply flip. So 6,790 psychological level lines up perfectly with our entry point. We can see the 4-hour time frame. 4-hour 50 EMA is approaching our entry zone. So that is very nice if we get the pullback, but also this huge 4-hour buy to sell candle lines up perfectly. We have a little bit of an imbalance resting right in here. So a lot of confluence for this. All we need is the pullback, but if we don't get it, oh well, we just move on to the next trade. That's how it works. CAD Swiss franc, I don't really have anything for this at the moment. We are currently in 4 trades. All of them are in profits. So this is the power of not only smart money concepts and institutional trading, but if you know what you're looking out for, you can keep adding to your position. Obviously, if you have these confluences and your rules are met for every trade, because as we keep saying, treat each trade as independent from one another. So originally last week, we had the fake out of their skewed head and shoulders. You can see we had the shoulder, the head, and the right shoulder here. We had that fake out enticing the sellers, also taking any buyers that were trying to trade off of, this quote unquote trend line, took their stop losses, came into demand. So that was really the institutional based entry. And then we made that higher high. We're in a higher time frame uptrend. So we are looking for continuations to the upside. And what do we do every single solitary day, guys? We always create liquidity prior to mitigating a level. We can see the institutionally sponsored selling volume started with this wick, 74261. And then we had a 2-hour time frame imbalance right in here with this candle. 1, 2, 3 pin pattern. I don't trade candlestick patterns. They're useless, but as we can see, when we engulf back to the upside, that's what it created. It's essentially what a 3-pin pattern is most likely some sort of candle push to the downside, a big strong liquidity run with this huge wick pulls back to the upside. So there's selling and buying at the same time. And then we have a little bit of a pullback and then continuation to the upside. So that trend reversal, that's what creates that 3-pin. So of course, we create liquidity prior to coming into these 2 levels here, equal lows there, ascending liquidity here. And we also have descending liquidity in here. Right. So that draw on liquidity is where we'll be looking to attack once we come into our levels. So it gives us more conviction that we're going to go long. So we come down into our 2 levels. We actually had a little more drawdown than expected, but we just pushed down deeper into our sponsored move, but it happened to be on the 15-minute time frame. I just somehow didn't see this. Not sure why I didn't, but it was more of a lower time frame imbalance fill. It was also the area in which we swept liquidity. So the liquidity was starting to be run. Well, really it started here, but exactly where it was run was right here. So I think that's probably why we came back down into it, hit that 7,400 level, psychological level, and then moved back to the upside. So we can see that we had the huge sell to buy. Now, what's interesting about this entry here, because we had the re-entry upon the pullback into this demand. Now, why is this valid demand? Now, I know I say, sell to buy, reprice, continue. Yes, that's true. But in addition to that, there's more confluence. What is everyone doing within here? They're buying off of this trend line. They're buying here. They're buying here. 1 touch, 2 touch, 3, 4, 5 touches. They're buying off of this quote unquote retail support. When it breaks the support, they're either doing one of 2 things. They're either selling or they're waiting for the pullback and the retest to get back in short. So that's exactly what happened here. We can see the support, 1, 2, 3, 4, 5 touches, break, retest, we start to fall, nope, right back to the upside, retail loses yet again. So guys, I know I keep saying, I'm very harsh on retail traders, but it's quite frankly the reason why they lose. It's just ignorance in the market. And if you find yourself trading these retail concepts, I highly recommend you check out our free YouTube videos if you're not a part of our VIP channel, and just watch how smart money works in the market. Is the most applicable way. The market moves. It's the real way. It's based on institutional order flow and volume. Trend lines don't matter. Fibs don't matter really. None of the retail patterns or, candlestick formations, they don't matter. It's all about where liquidity is, where objectives are, where the institutions are looking to push price. Without the big whales, I call them the big whales or the big fish, the institutional, institutions, banks, without them, there is no movement. There is no movement in the market. Us retail traders do not push price. I promise. It's not how it works. So anyways, had the retest, we push up to the upside, break counter trend structure. We knew, boom, easy setup, taking it back off of the retest. Retail is selling in here, but just kind of retesting old demand. Well, prior supply that flipped to demand because we invalidated this supply in here because we failed to make the lower low. So that was our 3rd entry. And then if we zoom back out to the 1 hour time frame, we had our 4th entry just upon this last sell to buy that formed during New York session open, 9 a.m. Eastern time. Had a little bit of drawdown and we kind of chopped around for a little bit, but nonetheless still in profit. What I do expect to happen is if we can get, I can't say I expect it to happen, but if it happens, then I'm prepared. We're forming this again, retail trend line, 1, 2, 3. This is the low that created all of these highs. So technically this is the range. So we could really have an overall pullback and then go long again and still maintain our structure, just like we had here. This is the low that created this high. So all this intermediate swing point lows, it's just destined to sweep the liquidity, acting as the overall pullback in the market for more continuations. That's the difference between higher and lower time frame trading, right? Just because we may have a break of structure here on a lower time frame doesn't mean we're going to pull back and go short because we're overall bullish. It just means it's going to be an overall pullback most likely for a continuation to the upside. That's where many people get confused. So what I'm thinking is, price could potentially, again, do that, have that overall pullback, sweep retail trend line here, potentially have that, head and shoulders pattern, enticement below the neckline, the low, and then move back to the upside, creating maybe a massive sell to buy. We can take it off the pullback for continuations to add our 5th position because we are in 4 right now. I am currently holding all of these positions, especially these 2 at break even. I just want to make sure I'm safe on these positions. I've taken a lot of partials already. This position and this position here, I'm still holding my 2 below our low right in there. All right. So that's CAD Swiss franc. Euro NZD, Aiden called out a beautiful trade last week on the 30th of August here at this I think it's the 30-minute demand level here. Now, what's interesting about this, why is this valid over something like this or something like this? Because, I'm not to say this isn't valid, but this candle never swept liquidity. This is not a sponsored candle. It could act as demand in which, if you did take it long from that level, you would have gotten in, but obviously we had an overall pullback. Okay. So why is this valid? Well, first of all, we have to understand structure. We started to accumulate. We broke out of the accumulation. We've made that higher high. So higher time frame, we're starting to have an overall pullback in the market. Right, we can see we broke the counter trend structure to the upside. We're probably going to be looking to push into our higher time frame zones here. This is the most recent higher time frame supply level. So 700 will be that overall target for us. Okay, that was a level in which we talked about for quite some time now. Okay, so that's Euro NZD. We're going to go down to a lower time frame again, 30-minute. So what's interesting about Euro NZD is that we created a lot of liquidity prior to London session, Asian session, right? Just choppiness. London session open 4 in the morning, huge sell to buy. Now we can take it off of the demand or the sponsor candle. Okay. So why this level in here? Well, again, thinking back to CAD Swiss franc with retail, right? So we sweep prior day or prior, I think it was the prior 2 days, liquidity. We sweep the prior days equal lows, right? Enticing the breakout traders short with the Asian range breakout. Starts London session, sell to buy, we make a higher high as expected because we're bullish. But in the counter trend, lower time frame traders are looking at this like lower low, lower high, lower low, lower high. Oh, I want to make a lower low with lower time frame trend. Nope, right back to the upside. So they're selling in here, but we know we swept liquidity. Higher time frame direction is long, so we want to be pulling back into our most recent demand. So this once was supply. It was invalidated because we did not make a lower low, but we made a higher high. So it flips to demand. So that becomes our level. So if we just be patient and wait. Now, if price were to just do something like this, if we just did something like this and price just was all up here, this is probably now invalid because by the time we push all the way back down in here, it's probably not going to react just because, it most likely will just be a break of structure. Meaning if we just kept pushing, if price doesn't come down pretty close to mitigate, it's probably not the level in which the institutions are really caring about. Okay. If we're all the way up here, and if we come all the way back down in here, it's probably just going to be a break of structure, and it might just be like an overall pullback, right, for a lower low. Right. So that's why we just have to pay attention to where price is in accordance with our areas of interest. But while we're trading in here, we formed relatively equal highs. This is the structure, higher high, higher low. This really did not create a higher high. I would not classify this as a higher high. I would classify this as a higher high because we finally closed decently above our previous swing point. Okay, so once we created this higher high formation here, this becomes our range from this low to this high. Once we start to pull back, obviously, just like this. This was the low, this was the high, this was obviously the pullback. Then we made the higher high, we expanded. So if the range is between this low and this high, we can still trade all the way down, literally 99% of the way, and still be overall bullish because we would still be respecting market structure. So many people, probably many retail traders, are like, oh, we failed to make a higher high here. We broke structure, made a lower low. Now we got to pull back and go short, just like we did in here. They were probably taking it off the retest. Break and retest short? No, absolutely not. We're going long. We just had an overall pullback. All right, this is where education can really help you out here. You have to know the difference between reversals and continuations. This is simply just a continuation. If we were bearish, right, if we were doing something like this, then yes, that would be that break of structure you'd need for a pullback to then short off. But we're not. We're bullish. So we need to be looking for overall pullbacks in the market based upon where our actual market structure is. Because if you don't understand market structure, it's going to hurt you. Understanding that, we can understand lower time frame concepts or smart money concepts to be looking for our entry points. That's why we had, again, a wick entry, essentially. So what's next? We had the reaction, kind of consolidated a little bit. We had this last push to the downside before the big expansion. So we failed to make the lower low here. And if we just look at the counter trend, lower low, lower high, lower low, lower high, lower low, lower high, we failed to make the lower low. We stopped. We actually filled in balance, came into this demand in here. So that could have been your second entry, but wasn't the prettiest looking. But anyways, we rallied to the upside. That could, excuse me, that could have been your sponsorship move. It swept a little bit of liquidity. I wouldn't classify this as really too much of a sponsor move, more like a demand level. So higher high was formed, pull back into that level, had the reaction, chop, 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 created the new demand, higher high was formed. So that's why we're looking for, just continuations, pull back, for an additional long, filling up some imbalance, coming back down into this demand for more of a risky trade. I wouldn't say risky, but I'm more of a conservative trader, so I probably will place my stop below here. But if you want to place it below here, that's totally fine. But ultimately, 634, 6335 would probably be that entry, just right in around that demand. All right, so hopefully you guys understand what's going on in here. That's why it's important to just kind of, take a step back, focus on just a few pairs, and so you get to really learn the ins and outs of them. Now, I've been doing this for quite some time now, so I can look at all of these pairs and have an understanding of what's going on. But for those of you who are relatively new, I would highly recommend sticking to maybe 3 to 5 pairs, get to know them really well, okay? Next, Euro USD. So we were originally looking for re-entries upon our last buy to sell that really came back up into most recent supply in here. So just kind of the, continuing with the mitigation train. We didn't get that pullback. We may have one now. If we get the push up, I'm still looking to sell from 9943. But if we don't, then, oh well, we just move on. We had a beautiful re-entry from last week. This was called out, I think, on Friday of last week when this formed. We pushed to the downside, created equal lows. When we started to pull back, this was the draw on liquidity. We don't leave liquidity resting. So upon any pullback, you would expect, the most recent supply or demand level, in this case supply, to be validated and in continuation to attack this liquidity. So it wasn't the prettiest setup, but it made sense in terms of the concept because, probably a lot of people would say, oh, we're just consolidating. But from what I see, higher time frame, we're in a bearish downtrend, okay? We swept descending liquidity, had a buy to sell reacting off of this wick. Lower time frame supply, I'm not going to get into it. We reacted from it. You wouldn't have taken this short here because you would not have expected when price was trading in here to actually react. But when we did react and made that lower low, I just marked it up to make it look pretty, right? So don't think I sold it here. I did not sell it there. But we swept liquidity. So the confluences were liquidity run and then continuation overall direction of trend. This liquidity run happened at 9:10 in the morning. So New York session open, mitigation of our supply level at 11 o'clock. This is the end of London session. So we had that final move before the continuation for the rest of the day. Time and price is so important. We closed below our most recent structure point and we created equal lows. So obviously within the counter trend, high, low, high, low, high, low, high, low reaction off of this demand in here, failed to make the higher high, lower low. So this becomes our supply level. That's exactly why we had the reaction there on Friday. And then we had the continuation to start the trading week. We had a little bit of a gap. There wasn't really much in here to play off of, which is why I didn't take anything off the pullback. But now that I saw, we're just really continuing with lower time frame trend here. So this is really just continuation type of trade. Our last buy to sell, I believe this is type 1 continuation for those of you who have taken the course. And then pull back up into that supply level for continuation. Short, what I really like to see, and this is what we're seeing now, is the buildup of liquidity prior to coming up into this level. So you can see a touch here, touch here, touch here, building some resistance to entice retail shorts to have, have their stop losses above this high so we can go and run their stops. This is also not a low in the market. This does not look like anything. This means that if we get back up into this level, it's a high probable chance that we can come down and sweep this liquidity, right? Because usually if we're going to reverse, we would have a massive, sell and then a buy, and then we would just reverse trend, right? Very sharp moves in either direction. Lower time frame entry could be in and around this lower time frame supply, as we can see counter trend in here. High, low, high, low, high, low. Failed to make the higher high with this pullback, and then we made the lower low. Okay, so the lower time frame area of interest within our higher time frame area of interest. Okay, that's how we can kind of scale in. So that's Euro USD. Euro CAD, we are pushing back to the upside from our original entry, still in a little bit of profit. Stops have been moved for me from this prior high to this prior high. So if I lose, I only lose a little bit. Doesn't matter. But anyways, we could see an overall pullback in Euro CAD. Higher time frame. What did we do? Well, I'm not going to go over all of this. I'll go over it very quickly. But overall market direction is short. You guys can just look at that in your own chart. Okay. Descending liquidity, 1, 2, 3 touches, enticing shorts, huge buy to sell, sweep that liquidity, lower low is formed. We break the counter trend structure, coming up into most recent supply in here, lower time frame supply, which is why it doesn't look that pretty. But again, same concept applies. Sweeping liquidity, buy to sell, lower low, coming up into a lower time frame supply in there. So when that formed, we understood big buy to sell, huge sponsored move. Where can we be looking to get in? So when we saw equal highs start to form, high here, high here, high here, I looked to see if there was any supply that we could take it off of in here. There wasn't really anything pretty. So what I wanted to do was wait for the reaction. So we got the big buy to sell, institutionally sponsored buying volume into, I guess, some sort of supply level, but more importantly, sweeping liquidity and continuing in the overall higher time frame direction. So not only are we higher time frame bearish here, so lower low, lower high, lower low, but we're also lower time frame bearish when we broke the counter trend. So that's how you can kind of confirm these trades. And, there's a lot more that goes into it, but from a broad level perspective, that's what you would look for. Just a break of structure, counter trend here. So that really kind of confirmed that for us. We didn't quite get the pullback we wanted. We can see the overall sponsored move and then the lower time frame supply level in here that, failed to make the higher high in the sequence, and we rolled over, made the lower low. So that's our lower time frame demand to supply flip, because we can see high, low, failed to make the higher high, lower low. This is our demand, our prior demand that we originally reacted from, but then failed. Okay. So that's why I still have this level, because what could it be, guys? What happens if we do something like this? Are we going to pull back and go long? Most likely not. Why? Because we're overall bearish. Just because we break the counter trend structure in an overall bearish market does not mean we are going to go long overall. It just means we are probably going to see a higher time frame pullback, because you have to understand higher and lower time frames. If you don't, then you're kind of screwing yourself. We understand that this on a higher time frame is just one expansionary leg, but on a lower time frame, it's a trend. What happens if we do this? What is this? It's a lower time frame trend, but just a higher time frame retracement. That's why understanding the higher and lower time frames, you'll understand the difference between reversals and continuations. So, just continuing with lower time frame structure here, lower low, lower high, lower low, lower high, lower low. If we scale in to see what's going on, we will see that within the counter trend move, high, low, reaction off of this mini demand, failed to make the higher high and made the lower low. So that's why this flips to supply on a lower time frame, which is why we took it short from that level. So we kind of are forming more equal lows now. So that would, be more liquidity. I would like to see continuation short, maybe back up into this level here. We're getting that reaction now. But if we end up breaking to the upside, then this level is still valid. This supply here, just in case we only get a shallow retracement of maybe 50%, 61.8, something like that. But if we do come higher, this is still valid, these two levels. And then we could just see an overall pullback. And in that case, that's fine. Fine, I lose this position. I may lose this position, but I guarantee if this position works out, even if I win 1 out of the 3, I'm still making a lot more money than the losses that I would have incurred there. Okay. So that's why it's okay. You don't have to pick exactly and figure out exactly where we're going to reverse. No one knows when we're going to reverse. The market knows, right? The market decides. But we just have to adapt to what we see and trade what we see and not what we want to see. Okay. That's EuroCAD. GBP AUD, I believe there was a question in the chat about this pair. What's interesting about this? Now, I was talking to Aiden about this morning, so it's actually quite interesting. You guys know those things. I don't know if you know what they're called. It's like a picture of something, could be in video format that, you keep scaling into it, and it just becomes the same picture. You keep scaling into it further, becomes the same picture, scaling into it further. That is fractal. The markets are fractal. They do the same thing on every single time frame. So if you guys watched my daily market breakdown video yesterday, which I highly recommend you do because there are still setups that are valid, and a few of them played out from the video yesterday, just FYI, you would know that I talked about how, when people ask me what time frame you trade off of, I trade off of any time frame. There's no specific time frame, because what is the hourly time frame? And the hourly time frame is simply just a zoomed in version of the higher time frames. It's the zoomed out version of the lower time frames. It's the same picture, just zoomed in and zoomed out. So you cannot tell me that you only trade the 15-minute and are overall profitable. You can't, because that's not how the market works. And if you say you can, then you're probably a beginner or really don't know what you're doing. And I'm just being quite honest with you, because that's not how the market works. You have to have a full understanding of every single time frame in order to put together all the pieces. Let me show you how that works. So I'm going to go to like the 2-minute time frame here. This is really, really cool how this works here. This is how we can scale in properly and get entries just like this. I didn't trade this because I didn't see it, but after the fact, it was kind of almost like a hindsight type of thing. I just didn't see it in time. But that's something that you could have traded, and I'll show you why. So what's going on in here? We have accumulation. We broke the structure. We pulled back into demand. We go long. Where is our entry? Here could be our entry, right in that demand. Now let me zoom out a little bit. Let's see if it looks the same. Oh, it's starting to look the same now. Accumulation. Boom, 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 boom. Break of structure. Where do we get in? Off the pullback. Where's the demand? Demand is in here because this is where we initially broke out on the lower time frames. That could have been your entry to the exact T. 6,900. Is that a coincidence why 1.69000 lines up perfectly with that level and that's exactly where we reacted from? No, it's all on purpose, guys. Every single thing that happens in trading is for a reason. Okay, now let's zoom back out. So now we looked at this accumulation. Let's just zoom back out and look at this accumulation. It's the same exact thing. We break the counter trend structure. We pull back into our demand zone. This is where we broke out of the lower time frame accumulation here. So this is the whole demand. 697, 696. This is where we're going to be looking to go long. So not only if you had no idea about Wyckoff accumulations and where to look to enter, you would understand just based upon pure market structure that we broke the counter trend. You can be looking to potentially go long. Now, could this just be an overall pullback to go short? Possibility, because we are still bearish. However, with all the other confluences, this is the case for me in which I would like to take this trade long upon the counter trend break, even though we are in an overall bearish market. But we still have to understand that we are still overall bearish. So that's why we have to look at where the objective lies. Well, this is just comes down to zooming in and zooming out. There's a lot more confluence than what I have here. This is just an easy, marked up version of what I'm trying to say here. Lower low, lower high. Lower low, counter trend has been broken. We failed to make the higher high, lower low. So we come back up into this supply, obviously creating that lower low, lower high, kind of chop around, lower time frame imbalance, lower time frame, 2 buy candles creates that supply, made the overall lower low. We accumulate. So if we go long, we're looking at taking profit at 7,350 because that's the start of this supply level. And we're also possibly looking at shorts from this level as well, just to continue with the overall higher time frame structure of the market. All right, so hopefully that makes sense to you. That's GBP AUD. Going on to GBP CAD. GBP CAD really annoyed the hell out of me this morning just because, well, it was just such a beautiful trade, but it just didn't pull back enough. But, that's something that we just have to be okay with. We should not be chasing trades. Once we break this lower time frame structure here, we don't want to be looking to short. Why? Because there's no setup. The setup was right here. We don't want to chase the trade and have FOMO. Wait for the trade to possibly pull back up, act as liquidity, come into this level, and then short off. If it doesn't happen, we move on to the next setup. If it does, great. It's still a valid setup. You have to be patient. Like I said, remember where I talked about AUD CAD? Actually, we'll talk about AUD CAD. We have 5 trades on it, 11.9% total, using good risk management, using 0.5% risk on each. I'm not using 5% risk like probably some of you do. And we're still hitting 11.9%. This is why patience pays, right? You don't need to chase trades and chase profits. Let them come to you. Anyways, higher time frame GBP CAD is very bearish. Okay. Just doing the same thing over and over again. Liquidity induced, take liquidity, lower low was formed, come into supply. Liquidity was induced again. Take liquidity, lower low, come into supply. I sent this out last week. So if you guys got in, I know some of you did. I saw some of your screenshots. Continue to hold. Stop at break even. You can continue to hold this all the way down into 1.5. That's where I have most of my position being taken out. It's a key psychological level. So beautiful setup that would provide you with a nice, let me just see what it is. Kind of curious. 1 to 7, just about. So boom, my Forex Fun Challenge passed right then and there. pretty much. Anyways, buy to sell. This is the institutionally sponsored buying volume, not this candle, not this candle, not this candle, but the whole start of this huge up move. Why? Because this candle in here did not take liquidity. It's not a sponsor candle. Remember I talked about fractality. This is just a zoomed in version of this entire buy to sell. Where did the liquidity start to be run, or where was it actually induced? Where were the institutions actually placing their orders? They started the buys right in here. Higher time frame is probably just a singular buy to sell. Yep, there it is. So when people say, oh, this is the sponsor candle right in here, well, why can't this be the sponsor candle here? They're like, oh yeah, that makes sense now. So don't get too caught up in these time frames, guys. You know, obviously looking through all the time frames is important, but understanding where the big fish are coming into the market is just way more important. So a huge buy to sell. I guess you can say we kind of mitigated, but lower time frame, if we did get more of a pullback into our levels, we can see lower time frame supply zones, you know, right in here, right in here. This is where we failed to make a higher high. We made the lower low. So this is the lower time frame pullback. So when price was in here, we started to pull back, never hit these two levels. So I was waiting, you know, and price made the lower low, lower high, whatever. We started to pull back up, having that overall pullback. This is not a break of structure, or, you know, this counter trend is not a break of structure. I mean, it is, but it doesn't mean we're going to, you know, pull back and then go long, right? It just means we should be coming into a higher time frame level to then go short again. And we just missed it just by, I think, 8 pips or so. I forget. Oh, this is GPCAD. It's probably a little more. 9 pips, 10, 20, 30 pips, something like that. Anyways, we didn't hit our entries. These are still valid. We could still run this high because overall the structure is still here. Now we could do something like this and then run it lower low. Overall pullback, lower low in the market. Okay. So we were looking this morning at taking it off the lower time frame swing point. So here, 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 here. We're still looking for it. We finally did make that lower low. We can see we made the lower low. Now we can probably have that pullback into that level. This will act as liquidity. Okay. So what do we see? Well, liquidity was run here. Last buy to sell, counter trend. Boom, 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 boom. Reaction off the demand, failed to make the higher high, lower low. So that's why I wanted this flip from demand to supply to come into play there and react to go short. So 1.518, 1.519, maybe 1.52. We'll see. But, you know, I'm still looking at pullbacks up into this level. If we get it, great. If not, oh well, you know, we move on, but it's still valid. So keep an eye on that level. Also keep an eye on these two levels. These are still valid as well. Guys, if you're not marking this stuff up as we go or taking screenshots, I don't know what you're doing. I mean, I would highly recommend you do this. I mean, over the course of the past 6 months, I think we're probably hitting about 75 to 80% of our trades, all at least a 1 to 3, a 1 to 5. So, you know, this year has been probably my best year in trading since my start in 2017. Not to say we weren't good back then, but, you know, obviously, you know, you keep building your skills over the years. I mean, I'm still learning as well. You know, I'm always learning. That's what you have to be doing. But this is free stuff. I would highly recommend you take a look at this. You don't have to trade it, but at least mark it up and learn from it. That's the overall goal here. All right, GBP Swiss franc. I'm going to go over this quickly just because it's nowhere near our entry. Overall, I know it's zoomed out. I know it's blurry. Just bear with me. Lower low, lower high, lower low. Okay, overall, we're bearish. We already know that. Pound is bearish across the board. Okay. Most recent swing point is right in here. Why is it not anything in here? I mean, lower time frame it could be, but what is all this crap, guys? I mean, this is just ridiculous price action. Equal highs, descending liquidity. This is bogus. This means nothing to me. What really means something to me is where liquidity is. Where can you see liquidity? Big pushes to the upside, swing points, stuff like that. Okay. Liquidity was run here. Equal highs, 1, 2, 3 touches. Run, pulled back into demand in here. Failed to make the higher high, a lower low is formed. So this becomes our supply zone. So this is just the lower time frame supply into this higher time frame supply. So if I'm going to be trading this, my entry would be right there, obviously, but my stop would be right there. That makes sense. To come up and have our overall pullback in the market, right? Because what is it? Lower low, lower high, lower low, lower high, lower low. Just higher time frame trading in lower time frame areas of interest, sweeping lower time frame liquidity. All of this should be run. So at some point, I don't care if it's today, tomorrow, next week, next year, whenever, it doesn't matter. This liquidity is going to be taken. So we could easily make a lower low. Heck, we could make a lower high and another lower low, but eventually we're probably going to have that overall pullback. So I'm just keeping an eye on 1.1440. That is my overall level, looking for shorts there on GBP Swiss franc. USD Swiss franc, another one called out on Smart Money Sundays this week. Had a great setup here. I was originally looking for, continuations off of this huge sell to buy. And really what this is, demand was formed, equal lows, lower time frame, sell to buy, mitigation, higher high, come back down, create more liquidity, sell to buy again, mitigate this demand or this sponsor candle, create another sponsor candle, higher high was formed, more liquidity was, created. I wanted that overall pullback into this sponsorship move. We never got it, so couldn't trade it, but we did find an opportunity here this week. So again, it's just continuing with the lower time frame trend within our higher time frame move. Where is our higher time frame first and foremost? Well, it's right in here. Higher high, higher low, higher high. This is simply, guys, just an overall pullback in the market. Why did we stop at that exact price point? Well, it's because it's our most recent demand level. I had two demand levels because this demand didn't hit this demand, but nonetheless filled up in balance in here. And we went long. Broke the counter trend structure, so now we're overall bullish. Higher time frame objective, if we already go short, even though we already are in a higher time frame up move or bullish run, it's just this most recent structure point, supply level. So we'll probably look to attack these relatively equal highs and come up into probably let's call it 1.02. Maybe 1.0150. But at least up into that level, dollar still has a ways to go before potentially maybe having a higher time frame pullback to the downside. We'll see. But still very much bullish. So we just take it off of the most recent swing points, right? Lower time frame. As long as we have our confluence, but what is our confluence? Well, this candle was formed 4 in the morning. Demand was formed. So really higher high, higher low, higher high. Okay, so structure is there. Demand is there. We start to create relatively equal highs, so that draw on liquidity for when we do go long. It's the attractiveness to come and take that liquidity, but we create sell side liquidity before coming into our demand level. Consolidate, 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 entice the retail breakout traders short, mitigate demand, fill in balance between that wick and that wick, and we go long, taking out liquidity buy side. All right, guys, this does you have to have practice with this. You have to have experience. But when you understand what you're supposed to be looking for, and this stuff starts to come more easily to you over time, it's just repeating the process. Trading is supposed to be boring. It's supposed to be boring because it's the same thing over and over. But eventually, you're going to be able to look at a chart and be like, okay, I know exactly where this is going. Or maybe take you 1 to 2 minutes to mark up a chart, which is why I'm able to do all this in about an hour and a half time. So beautiful trade by Aiden. If you took this, congrats. Again, this was free. This was in our Smart Money Sundays video. Highly recommend you tune in. NZD Swiss franc, another one given out. Actually, 2 of them given out. So higher time frame again. Got to do some top down. Where are we going? Are we going long or short? Short. Right. There you go. Easy. Short. Where's our overall objective for shorts? Right. You need to understand where we're headed. Well, if we are to go long, and I'm not saying that we're actually going to go long from this level here, but I'm saying if we are to go long, we probably need to be pushing down into this level first. So we are still bearish. What's probably going to happen is we're probably going to fill this wick. We probably will come down, maybe make a lower low. But you understand what I'm trying to get at here. If we are to possibly in this world go long, probably should be maybe from this last sell to buy. Not really a sponsored candle because we have equal lows in here, but really the last selling volume before the big buy up here. We haven't come into it yet, so that's really going to be our objective. That's where we're going to be looking for, taking profit within ourselves, maybe holding a runner way down here. Anyways, where's the counter trend? Upon this higher time frame pullback for an expansion, where's the counter trend? High, low, high, low, high, low, high, low, high, lower low. So this becomes our range now. From this high to wherever we start to pull back from, that maybe here, start to pull back, we can pull back really all the way up into 99% of the way and still be bearish because we're maintaining our structure. So now we know on a lower time frame where we broke structure higher time frame is right in here. Well, what happened in here that we can take a trade off of? Maybe because the counter trend has been broken. So obviously, we were creating higher highs and higher lows, but we reacted off the most recent demand, which started right here, right? Our last selling volume. We reacted, but we failed to make a higher high. We made a lower low. So now this becomes our supply. And if you want to just scale in even more, the same thing, markets are fractal, same thing happened in here. High, low, high, low, high, low, failed to make the higher high, lower low. This becomes our supply. It really just is just the mini supply within this higher time frame supply. That's exactly why we stopped right there. I don't think I called that out. Maybe I did. I'm not going to take credit for it because I just don't remember. But I know I called these out, these two levels. So what happened? Well, once we made the lower low, I looked at what was going on in here, and we can see liquidity run, equal highs, buy to sell, lower low was formed. We broke and invalidated this demand within just the overall higher high, higher low sequence. So we finally broke structure, continuing with the higher time frame trend. So now we're looking for a pullback. Well, what was going on in here that caused the buy to sell? Let's go down to a lower time frame. We can see this massive, and I believe this was news, Aussie news, I believe. Aussie and New Zealand dollar are correlated. I think it was like RBA rate statement or something like that. But anyways, buy to sell. Okay. We had a little bit of a pullback. We reacted off of this level of demand, filling imbalance, but failed to make the higher high, made the lower low. So this becomes our lower time frame supply within this higher time frame supply here. Okay. Counter trend, same sort of deal. High, low, high, low, high, low. Failed, lower low. So that, obviously is supply now. Flips from demand to supply. Same thing over and over, guys, right? So what do? We create liquidity. High here and a high here. Just zoom out. Create liquidity. We go and run the liquidity, come up into our first entry and make our lower low. We actually create higher time frame equal lows, right? This wick did not take out this wick. We're looking to attack these equal lows now. But we ended up coming all the way back up. I did take partials when price broke the counter trend structure, did move stop to break even, just in case something like this happened, which it doesn't happen often, but it did in this case. So I did get hit out break even here. Made a little bit of money, but not as much as I could have. But, I still held this position. Why is this still valid? Because since this is the range from this high to wherever we start to pull back, I guess it was from this low, right? We can have an overall pullback. Yes, this is just lower time frame structure right here. But we saw we had the overall pullback, which is why we came into here. Overall pullback for the continuation. So this is not a break of structure. This is just a liquidity run, overall pullback for a lower low formation. So now we should be expecting that lower low. Okay. So, that's why I said, this is still valid. That's exactly why we reacted off of it. 6019. So made a little bit of money here, and now we're in a really good chunk of profit here right now. So I think we're, I think like a 1 to 3 maybe currently. I don't usually mark off my risk rewards. I just take my trades. I understand where my stop loss is because it's important to understand how many pips your stop is so you can understand exactly what lot size you need to be using. Currently up, about a 1 to 3, 1 to 2.9. All right. So up a good amount there. What's next? NZD CAD. I'm not going to go over this. I don't think, well, I guess I can very, very quickly. Higher time frame, we're very much bearish. Okay. Lower low, lower high, lower low, lower high, lower low, lower high. Okay. In here, the counter trend was broken. High, low, high, low, high. Stopped, demand, failed, lower low. This becomes supply. What do? We create liquidity, equal highs. We run it, buy to sell, mitigate supply, take liquidity. This becomes our institutionally sponsored buying volume. We made the overall lower low, so we're respecting structure. We just wait for the pullback back up. We come back up into that level, mitigate, lower time frame, distribution. Boom, 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 boom. Break of structure, failed to make the higher high, lower low. This becomes supply. Pulled back up into it, called that out. I know many of you took it around 8196. So that was a very good trade. So that was one trade on NZD CAD. Then again, same sort of deal that we just saw in NZD Chef, right? So we had that huge buy to sell. We had the reaction lower time frame from a lower level of demand, pushed up in here, but failed to make the higher high and lower low. So I was waiting for that retracement back up into these two levels. Didn't get it, and that's okay. We were still in from 8196, rolled over, made the lower low again. Lower time frame in here, Asian range, faked out of the Asian range low, breakout low, entice shorts, come back up, hit the stops, entice longs for the breakout traders high, then come short again, hitting their stops again. So big institutional move here, buy to sell, wiped out a lot of retail traders. So I pulled back up into just the open of this buying volume to sell. Perfect wick entry, 8085, called that one out again. Lower time frame though as a supply in here. Didn't quite hit it, but oh well. We're in from here. We're in from here. We're holding to make a lower low, 79043. Lower time frame again. Well, actually, we're in 3 positions looking for a 4th. Liquidity run, equal highs, buy to sell. We're continuing with the lower time frame structure. Buy to sell, break counter trend, pull back. Where was our supply? Right in here. Reacting off of this demand, failed to make the higher high, lower low, pulled back, shorted. Called that out last week. I think it was Friday. So made the lower low again. We're in a good amount of profit, stops to break even. And again, counter trend, high, low, I guess high, low, high. Maybe it wasn't really much of a reaction from demand, more or less just like a break of structure. That was our last buying volume before the short off. So I guess we could pull back up into that level, maybe 0.8 psychological level for continuations. I would like that if we don't come down into this low first, if we get the pullback, because then we still have equal lows in here to run, liquidity still to run. We also are forming equal lows now, lower time frame. So if we get that pullback, that is highly probable for a short. Now, what happens if we sell off into here and then start to pull back? Well, then that becomes a little tricky. And in that case, I probably won't place this position just because higher time frame liquidity would be run, and we could easily see that higher time frame pull back into our higher time frame levels to maintain the overall structure for then another lower low. So that's what could happen. Usually, we attack liquidity, pull back, make the market efficient, and continue. But if we keep these lows intact, then this is still valid for that lower time frame continuation into higher time frame liquidity, and then maybe we'll have that reversal. We'll just see. But VIP, I'll keep you guys updated with everything. AUD CAD, very, very similar. Very quickly, higher time frame, same sort of deal occurred, lower low, lower high, lower low, lower high. You guys can see the structure, right? Higher time frame, we're bearish. So if we zoom into what's going on in here, we can see the ascending liquidity, right? This happened weeks ago. Ascending liquidity, big buy to sell, broke the counter trend structure. Right? We made the lower low. So now we're overall bearish, lower time frame and higher time frame. What do I mean by lower and higher time frame? Well, higher time frame we're bearish, but lower time frame in here we were bullish. When we broke the counter trend structure after coming up into our supply level and sweeping liquidity, now we're bearish again, right? So what do? Well, we wait for an overall lower low to form. Lower low, we pulled back, had a massive run. 1, 2, 3 touches, probably 4. Trend line, they're shorting off this trend line. Nope, we sweep their liquidity. Coming up, mitigating the buy to sell. This is the supply in there. Many people would probably be like, oh, it's so strong to the upside, so strong to the upside. It doesn't matter. The market was already meant to mitigate this level anyways. Don't worry about volatility. It's created in order to just move price, right, into the levels it was always meant to go. We mitigate and we go short. That's exactly what happens, right? So now on the 6-hour time frame, this is just where experience comes into play here. You just kind of have to zoom in, zoom out, go to the different time frames, see what you can get. But in here, we had the imbalance, right? Big, huge buy, started to sell off, and then we really started to sell off here. And this retracement never filled this imbalance at 90905. So we zoom back out, make the lower low higher time frame, make the lower high, pull back into that imbalance. And that's exactly what happened. Distribution, just like we had on NZD CAD. Distribution, we broke the structure. Now we make lower low. So that's exactly where we wanted to pull back up into. The start of the distribution and then this 4-hour supply zone that we had in here. Called this out, these 2 levels 2 Fridays ago. Had those 2 entries. And then lower time frame, it was last Monday, I believe. We had the re-entry. So high, low, high, low, high, mitigate these 2 levels, lower, low, breaking counter trend structure. So I had just 2 additional positions off of where we started to have our last buying volume to sell off, but also lower time frame, last buying volume to sell off there. So 2 more entries. Again, 0.5% risk here, 0.5% risk here because we treated this as one trade. The same thing here, 0.5% risk here, 0.5% risk there. Treated this as one trade. So currently, we're risking 2% total, but they were 2 different trades, but really 4 because we had 2 positions each. So, we continue lower low, lower high, just playing it off of prior supply. Boom, called that out again. So now we're 5 positions deep, looking for our 6th if we get a pullback. So you would treat this as one position. You would treat these two as one, so 0.5% on each, and then these two as one, so 0.5% on each there, totaling 11.9% as we're currently standing right now. Looking for that sixth trade if we can get it, pull back into most recent supply after this buy to sell filled imbalance that came up into this huge wick, buy to sell that mitigated this supply. It's just the same thing over and over. And I know I'm talking fast, I just have a lot to go over. So hopefully that makes sense to you. I think I made a video. Was it on this? Maybe I made it on NZD CAD. I'm not quite sure, but I know it's on YouTube. One of our most recent videos, like most recent 5 videos, one of those. All right, a couple more. GBP NZD. So higher time frame, we are bearish, right? And then I talked about this on the daily market breakdown video yesterday. Overall, we're bearish. We're looking at making a lower low to sweep out this low here. But what's going on in here? I'm not going to scale in because it would just take way too long. Buy to sell, sweep liquidity, lower low. Equal highs on a lower time frame. Took that liquidity, mitigated supply, lower low again. Pulled back up, created a lot of liquidity, equal highs. Big buy to sell into lower time frame supply. Also the sponsored candle lower time frame that swept liquidity and mitigated that supply. Right? So big buy to sell. This is where we want to be coming up into 9.4 and 9.4235. These are our 2 levels. So if we get that overall retracement, again, it's not going to be a break of structure for a pullback in long. It's going to be an overall retracement for a continuation short, most likely, right? So that is our higher time frame level. We actually have equal highs here, and descending liquidity here. So that's where our overall shorts will come in. But is there a potential counter trend play? Well, this is where I say, just because we may think price should go short here doesn't mean it has to come up into that level. It may just roll over and go short. So why would we just want to buy it instantly, trying to catch both of the moves? It's just stupid, right? That's what, amateur traders would do. Always have to build confluence with every single trade. Like I said, 80 CAD, just on that pair alone, we made about almost 12%. You don't need that much. You really don't. And we were using good risk management as well. But anyways, we stopped here. Obviously, I didn't take this buy because, just through structure, lower low, lower high, you would expect a lower low. But we ended up reacting off that demand. And then we broke the counter trend structure. What we also did was form retail support. Support, right? People were buying off this support. We swept liquidity and enticed the sellers. We rallied back to the upside. Well, what do we do here? This is support. Break, retest, start to short off. Nope, right back to the upside. This is where we need to be looking to buy. Flip from supply. Invalidated the supply because we never made the lower low. And now we made the higher high, creating more descending liquidity. So this becomes our new demand. It stops. Little tricky. If you want to be very risky, below this low here. If you want to be more conservative, below that low. Okay. So that's GBP NZD. Just a few more. 80 Swiss franc. I'm actually going to go over Euro Chef because this is what Aiden sent out, and 80 Chef and Euro Chef look the exact same. So just mark off this level really quick, guys. 1 hour time frame. Mark off 6.6. Call it 6.690. That's all you need to know about this because Euro Chef and 80 Chef look the exact same. So you can go back on 80 Chef and look at it. Euro Chef. So what we can see in here is liquidity that was run. Okay. This high was run, big buy to sell, break the counter trend. In the process, we made a high, we made a low, we failed to make the higher high, and we made the lower low. So this becomes our new supply zone. Okay. We create ascending liquidity. 1 touch, 2, 3, 4, 5, 6. Retail is buying and buying and buying in here. And wow, are they in for a surprise. So hopefully price will come up into that supply level and short off. We get the entry. Retail loses yet again. See, that's why I love when retail traders lose, because then I make money, And obviously I'm just kidding. I'm not trying to be mean, but you get what I mean though. Retail patterns, they don't matter. Trend lines don't matter. I only draw them up because I'm showing you where liquidity rests. So when we do come up into our level, if we do have the reaction and it goes in our direction, that's where we're going to be looking to attack. That's why we call it the draw on liquidity. Okay, that's where we're looking to go next. All right, last one, and then I will hand it off to Aiden if he has anything. I know you guys trade US30. I hardly trade US30 at all, but there is a good setup on it. But it's a higher time frame setup. I talked about this on our last Wednesday live session. I'm not going to go over it in too much depth, but I'll just say higher time frame distribution. Okay, we can see that. Break of structured, pull back into supply, lower low is formed, pull back into our next supply zone, lower low. So we're just continuing with the overall bearish structure. If I zoom into here, this is where we swept liquidity. Buy to sell becomes our supply, also a higher time frame imbalance that came into this supply in here. Created liquidity prior to pushing up into that and mitigating it. Descending liquidity, huge buy to sell. This becomes our institutionally sponsored buying volume before the sell-off. So counter trend, high, low, high, low, high, low demand flips to supply because we never made the higher high. We made the lower low. That was expected anyways because we came into that level. We made the lower low overall. So equal highs prior to coming up into our now supply zone, also imbalance, was once demand, but we failed to make the higher high and we rolled over. So this becomes supply, create liquidity prior to coming up into that level, create more descending liquidity. We finally have our overall pullback up into that level. That's exactly why we stopped right there to the exact T, the exact pip, right? We pull back, counter trend. This isn't, I mean, I really haven't done much digging into the structure in here, but this is probably where this most recent swing point is. Reaction off of the demand in there, swing point, failed to make the higher high, lower low. So this becomes our overall supply zone. Okay, so that's where we're going to be looking to take our short position. I don't trade this that often, so this is probably a pretty decent sized stop, but for US 30 in terms of risk to reward, it's probably not that bad. So stops could go there. Targets will obviously go at 2,960. That's still 1 to 4.62. So even though this is what is that 68 pips or 680 pips? I'm not sure the pips for US 30. But anyways, it may look like a lot, but in all reality, what do we need to focus on? Risk to reward. 4.6% is not that bad. So I'll be looking at that and then maybe a lower time frame supply in there. Okay. Overall targets. I asked the question. No one got it right. I was quite disappointed. Not sure why. I talked about this so many times. Why 2,960? We didn't come into it here. It's also this low, so it's also acts as liquidity. But why? Because this is where we initially started to fall when COVID came out. 2020. Big, huge short off. Okay. So we're just retesting the prior high. Doesn't mean we're going to go long from that level. It just means that, prices will probably be attracted to that level. Either to, continue to short off, which we're looking for shorts anyways, but potential buys, it really needs to come in here first. I'm not saying it's going to buy up, but if it does, it still needs to come shorter, if you get what I mean. All right, guys, I know that was a lot. Hopefully you guys learned a lot. I'm going to stop sharing my screen. I'll take a few questions, and then we will go from there.
That was quite a lot. You guys were in for a treat today.
Yeah.
And a lot covered on Smart Money Sundays. Already done and dusted for the week.
Yep.
Someone keeps asking about GJ. There's nothing on GJ, bro. There's nothing on the yen pairs. So why try to force a setup on something where there isn't one?
Right.
We preach layup setups here. And if you have to look at a chart for more than 5 minutes, once you get to the level of experience, then you're trying to force it as opposed to letting the setup simply present itself to you immediately.
Yep. I don't have much on GJ. I was looking for shorts. I'm currently in shorts, actually in a very small position, in a little bit of drawdown, but still respecting overall structure. So I'm still looking for overall sells on it. But again, the yen is quite weak across the board. So I wouldn't be surprised if it went up and hit my stop. But, I don't care. That's one loss over the course of the last 10 winners.
Everyone loves GJ. It's good to have your own, pairs that you like. But just because you love GJ doesn't mean you have to, always be in a trade on it.
All right. And if you like GJ, then that's good. But what I would not recommend is to trade GJ just because it's volatile, right? Just because it pumps out pips doesn't mean it's a good pair to trade. It can easily pump out pips in your opposite direction and really screw you over. So it goes both ways. Even if something only moves 30 pips a day, it's not going to move that much against you, meaning it's all about risk to reward. If you have a 500 pip TP on GJ, you could easily have a 100 pip stop loss just because maybe that zone required a 100 pip stop. But maybe on something like AUD NZD, you may only have a 30 pip take profit. But because that zone is the same as what it was on GJ. It would just be less pips, still giving you the same risk to reward, if that makes sense. So don't trade it just because it's volatile. Trade it because you actually enjoy trading it. No, I'm not saying that, it's a bad pair. I'm just trying to, give you, my advice through experience. Because I did the same thing. I tried to trade US30. I tried to trade Bitcoin because it pumped out pips. But that I realized that it doesn't matter what I trade, because if you use good risk management, it's going to be the same every time. What are the difference between inducement and smart money trap? It's the same thing. Inducing liquidity, trapping retail liquidity, it's really the same thing.
Yeah, it's engineering of liquidity, right? Think about double tops, double bottoms, relative equal highs, relative equal lows. It's where the majority of people are actually executing trades improperly, right? And therefore pulling liquidity above those highs or below those lows, which oftentimes is actually right prior to an area of mitigation, right? And so the central banks are accomplishing two objectives at once, right? They're purging the liquidity and at the same time mitigating and accounting for breaking even on hedged positions in the market.
Mm-hmm.
So we like to see that, if you identify some pretty clean, engineered, especially precisely equal highs or equal lows, that's a good cue, especially like if you're in a downtrend and you see perfectly engineered equal highs, and that's a good cue to look right above that area, in that vicinity for, okay, what can we account for? What can we, what needs to be mitigated while simultaneously running out those highs? And that, that right there allows you to get some very precise entry points and maximize risk to reward.
Yep, definitely. And I covered GU. No, I didn't see anything on GU today. Gold, I don't trade gold. I'm sorry, guys. Let's see. How can you tell the difference between a liquidity grab and a BOS? Sort of what I mentioned before about continuations and reversals. If you're in a higher time frame downtrend and you have a big push to the upside, it's probably just a liquidity run, higher time frame pullback for a continuation short. But if we're in a higher time frame uptrend and you make a higher high, well, it's probably not a liquidity grab. It's probably just a continuation with the overall trend. So you just have to understand the higher and lower time frames, swing points.
Well, also, if you're watching price, liquidity grabs are often very quick in nature. So they'll run the high and then snap back within the range. Whereas breaks of structure, we like to see price maintain, for a significant amount of time above that high or below that low, and more or less consolidate and close above or below that level. Liquidity runs oftentimes just really won't close above that level. They'll just snap right back within the range.
Mm-hmm. You think it is important to study and master Wyckoff in order to be really good at smart money? No, you don't need to understand Wyckoff in order to understand smart money. It's a good addition, but it's not necessary. Wyckoff helps with, more precise entries or, understanding offloading and onloading of institutional liquidity and volume. It's important, like I went over AD CAD and NZD CAD, there were distributions within the higher time frame supply zones and higher time frame sponsor candles. But if you understand that was a supply zone or a sponsor candle anyways, then it doesn't matter. You just wait for the counter trend break and then the pullback like we had on NZD CAD for a big short. So you can, it's not going to hurt, but you don't absolutely need to. How do you get a 1 to 3 risk to reward ratio with a 2% trade? I'm kind of confused as to what you mean.
A 2% trade on a 1 to 3, you'd net 6%.
Yeah. But I wouldn't recommend trading more than 1% per trade, guys. You don't need 2%. You don't need anything more than 1. You really don't need anything more than 0.5%, but it's the whole mindset between retail and institutional traders. They want 40, 50% return a month, and that's why people blow accounts and lose and are never overall profitable. Guys, I know you may think, oh, wow, this guy's a jerk. This guy really speaks his mind. Yeah, I do, because it's true. And, you know, I know so many people who over leverage and keep blowing accounts. What's the cycle? And I'm going to be creating a video on this week, the cycle of a Forex trader. So stay tuned. But in all, you know, broad perspective here, what do? They over leverage. They over leverage. They lose. They refund their account. They over leverage, maybe win up big. They end up losing eventually. They fund their account again. They keep repeating the same cycle and are never, ever learning because, you know, they're still sticking to what they think they know is right. Right? Do not risk more than 1% per trade, guys. You don't need it. You really don't. Start building good habits, because if you're risking 1% on a $100 account, you're only risking $1. So you may make like $3 on a 1 to 3 risk to reward. But if you don't think that's enough, then you're not going to have the habit of, if someone gives you $100 million, how are you going to still risk 5% a trade and 10%? Like, that's just not smart. Build yourself a habit so you can build your account over time and still, you know, use good risk management and not be enticed to over leverage. It's just all psychology, which, by the way, psychology course will be coming out by the end of this month. I briefly spoke about GJ. I don't really have anything for it. I'm looking for shorts at the moment, but yen is very weak, so I could easily see continuations to the upside. So I don't really see anything on it that I'm really interested in. How do I use the VFI indicator? All right, I can go over that really quick. No problem. Hold on 1 second. VFI. So going into NZD CAD, right up here, we have the distribution. So you can't just play. You don't want to just put the VFI indicator like somewhere right here. You want to be looking for divergence in a higher time frame level of interest. So we already knew, based upon the liquidity run in here, equal highs, we ran liquidity, buy to sell, made that lower low in the market, right? Because we're making lower lows and lower highs. This becomes our interested level. So when price comes back up into that level, that's where we need to be looking for the VFI. And obviously, you don't want to be looking for the VFI when we come into here because, well, it's not enough price action. You just wait a little bit. Wait for the discrete higher highs to be formed. Maybe wait for a break of structure, and then you can take it off the pullback, right? Because we broke structure here, failed to make a higher high, and made the lower low. So we pulled back up into that level, and I called that out perfectly. But anyways, you go to indicators. You simply just type in VFI, and it's the first one. Volume flow indicator, UTS. It's by this person here, okay? Really like it. It's really the only indicator I use beside the 4-hour 50 EMA. And I really don't even use the 4-hour 50 EMA. It's just a good confluence to have for overall direction. But how we use it is we look at, you know, when price is pushing up, obviously we know that. Price is continuing to push up. But what is volume doing? Volume is diminishing. Why does this happen? Because when the institutions are offloading their positions, they have to have someone on the other side of the market to take their positions from them. Right? Because if they're trying to short, someone else needs to buy, right? Because they're selling price to them, if that makes sense. This is how the market actually moves and it works. It's not just, oh, volume divergent. Well, what does that actually mean? Right? That's why we have to understand what things actually mean. Once you understand the actual reasoning behind the market, it becomes so much easier to trade, guys. But anyways, they're offloading their positions. They're selling their position to other people, right? For every buyer, there's a seller. So if they're shorting, someone else needs to be buying. Okay. That's why price continues to push up. They're selling it to other people, causing price to push up. But when they're selling their positions to other people, remember, they control most of the volume. That means selling volume starts to come into play. Buying volume starts to diminish, right? Because there are less buys in the market. Right? They're offloading their buy positions, giving it to someone else. Then they're selling the market. So the buying volume is starting to diminish. Selling volume starts to take over, but price is still pushing up because they're offloading their positions. That's why we look at VFI, because then that gives us a high probability that it's actually going to be a potential reversal, right? So hopefully that makes sense. It's a very good confluence, but we need to understand the actual reasoning behind what volume and price divergence is, and not just saying that it is volume price divergence, right? So good question. Hopefully that cleared it up. Hi, sir. How's it going, Harry? Good to have you on. Yeah, I agree. It is quite bullish, very strong bullish this week. GJ higher time frame is higher time frame consolidating. But guys, we are starting that trading challenge soon. For those of you who don't know what this is, it will start on September 12th. It will end on October 12th. So a full month. You will open up a demo account of your choosing. Doesn't matter what account size, doesn't matter what brokerage you have, but you have to cap it at a 1 to 100 leverage. And you'll be trading from September 12th to October 12th. Whoever has the most percent return, obviously we're going to be looking at drawdown and risk as well. Because if you risk 10% a trade, I'm going to see that and automatically disqualify you. Can't risk more than 1% per trade. The top 3 traders will win funding challenges provided fully by us. And, the second place will have lifetime access to our VIP community, and first place, not in addition to the funding challenge, will also receive our all-inclusive mentorship program. Includes courses, one-on-one mentorship, and lifetime access to our VIP, where we send in our daily trade ideas and analysis. Just had another person hit me up the other day saying they passed a funding challenge from our trade ideas. So guys, if you're interested in taking your trading to the next level and really learning this stuff and becoming profitable and consistent with it, I highly recommend you just book a call with us on our website, arielfxtrading.com, just to see if we're the right fit for you and if you're the right fit for us. And if we feel as if we can work together properly and create a personalized plan for you, then we would love to work with you. But it does require an investment in your education, but I would say don't let that investment go to the market. Invest in your education first, instead of saying, I don't want to do this and that, and I just keep trading, but then what? You don't have the education, you keep losing. So, and I'm not saying it just for our program, this is for other programs as well. I would highly recommend investing in education first and foremost, and then we'll focus on your trading. That's what's really going to help you get to where you want to be. So many people have that instant gratification where they just want to sign up for a prop firm challenge and then they keep failing it. Or they want to just put their money into an account and start trading it. Hopefully they can make some money. And then they keep going through the cycle of losing and refunding their account. You got to take it slow. This is a process. You got to treat it as a business in a sense. Funding account size. Yeah, good question. So third place will get $25,000 funding account. Second will get $25,000 funding account plus lifetime VIP access. First place will get $50,000 funded account with all-inclusive mentorship. So that will be from the 12th of September to the 12th of October. You cannot trade cryptos. You can trade indices if you want. I don't care. You can trade news. I don't care. I don't recommend it because that's just not smart, but whatever. And you can't use EAs. Anything else, free game. And you have to provide us with your MyFX book or FX Blue. You have to attach that to your account. You have to provide that to us no later than the 16th of September. Because we're going to be tracking it, doing a full analysis to make sure it's valid, verifying every trade. So you guys can try to cheat, go ahead, but we will definitely catch you. We will get the real traders on our side here. Where can I check in? Watch the video on YouTube. I just posted it yesterday. You don't really have to check in. You just have to create your demo account and attach it to an FX book or MyFX book or FX Blue, and then just send that link over to me so I can monitor it. But you can't start trading until the 12th, so next Monday. And that's pretty much it. And then on October 12th, it will be done. And then that Saturday on our live session, I will announce the winners and provide the top 3 traders with their respected reward. All right, guys, any other questions? Got to get going. Got a lot of stuff to do today, but I appreciate your time. And we will talk to you all the Saturdays. Saturday, 10 a.m. Eastern. Be sure to hop on. You're not going to want to miss it. If you guys missed like half this live session, go back and watch the recording. It's always going to be there. Make sure you guys are following along and giving out free money, essentially.
Absolutely. Thanks, everyone. Cheers.
Take care, guys.